There's one stock that is about to skyrocket, in my opinion. I'll give you the ticker right now. It's AAOI, Applied Optoelectronics. It's the AI infrastructure play. Optoelectronics are lasers and laser-like sensors, which are in the chips that make up data centers. So it's the picks and shovels for NVIDIA, which we typically call the picks and shovels. So let's get into what this stock looks like on the chart, and then we can get into what it is they can be compared with in terms of peers. This is why the chart looks so good. If you knew nothing about what I just told you about what this company does, which many great investors don't know what companies do, there's been a ton of volume starting in mid of 2 years ago, okay? And the stock has just sort of worked its way up. Obviously some euphoria late last year. And then with the tariff down move, AAOI also had a down move. This is a monthly chart. So this is actually 3-4 months, 5 months there. It's a while. But now when we zoom in, we can see that they worked their way back up and they're at this important whole $1.30 level, which actually goes all the way back to November of last year. Okay. So we'll talk about what they do. We'll talk about their peers. We are going to make sure we're talking about how to invest. So I do want to say that there is no other holders of the stock prior to November of last year. So these are all of the bag holders we have to reckon with. And when we talk about bag holders, we mean people who own it up here, who when the stock gets back up there, they could sell because they're suddenly break even on your possession. You could understand that. If you're underwater, you're looking at your portfolio and suddenly you are back to break even after months. Well, sometimes you sell. But if you can get above this 45 level, a ton of blue skies. And right now it's this $30 level. So you can get tight risk reward for that buy. So that should satisfy the quant types, the technical types. A lot of the young investors are very technical because, I don't know, they have better eyesight or less knowledge of what's going on. But whatever it is a way to invest, and it is pretty effective despite people not liking it as much. So let's get into some actual information and less commentary and judgment and look at these peers, okay? CRDO, COHR, and LITE are the main peers in, you could say, optical connections for data centers, okay? Networking, you could say. So COHR, it is at an interesting level. It does have some strength. Earnings results definitely at a negative reaction, but it's boding okay for the sector. Light has done great, so that's a great note of confidence for the sector. I wouldn't want to buy it now. It's 100% above from the 200-day moving average. 200-day moving average is a moving average a lot of companies use. A lot of hedge fund companies, that is. Traders, professional traders, and retail traders, who I guess we are professional. CRDO also doing excellent as well, okay? And this was the tariff low. This is 270%, okay? So I think there is some meat on the bone on the one that hasn't gone yet that's also at a very important level. And if we want to get a little bit more granular as to what this company does, well, I'll tell you what these guys do, okay? Lasers, optical products, networking, okay? And interconnections, okay? Are they different? Yes. Does it matter how different they are for our purposes? No. Now let's look into what the one we actually want to buy right now based on the chart does. Okay, there are some risk first. If you look at the most recent revenue right here for AAOI, it did have a negative earnings per share, but the reaction was good. So we don't pretend to be financial analysts here. We look at what people are actually doing, which shows us what they want out of the stock beat their expectations, you could say, even though it's a negative earnings per share. They do have some plans for expansion, about $80 million new facility. They're hiring, okay? Very soon. That's a good sign. We don't have to over analyze exactly what's going on here. But they're certainly in the right theme, okay? These are all of the right buzzwords, okay? We love these buzzwords. Not just analytics, real-time analytics, okay? And these are in the broadband space, of course. Of course, when we think of that, we think of semi-stocks like Broadcom, okay? Which has done incredible as well. So once again, I do think this is the one that hasn't gone yet. And that's what we try to do here. There's not as much talk about the stocks that haven't gone yet, right? But that's really what we need to be focusing on to do well. And that was negative, but it narrowed relative to prior year, okay? And I can explain that in other words the way chat did as well, okay? But yeah, I do think that earnings reaction was strong. And we don't have to worry about, we know they have over $100 million of revenue. This is a big company. Well, as far as companies that are sort of unknown are. Now, other risks we could look out for, although we're likely to see this in the chart before we hear them in news, okay? That's not too scary because we know what they do. They essentially serve data center customers, and there's only so many huge purchasers of data center components and purchasers of data centers. It's the big dogs, right? It's Meta, it's Oracle, and we don't really have to worry about those unless the chart moves or we see some type of news that is negative while the market still goes up and this company goes sideways. Okay, so that would be called relative weakness to the market. And if we hear something like Microsoft choosing a different provider for their basically optoelectronic components, sensors, then they could lose half the revenue. Okay, that's a big deal. That's a big deal. That is from the 10K. So other than that, there aren't huge customers that we have to worry about too much. And as far as, again, what they do, you can think of them as like the Cisco, which had a massive run in the early 2000s and late 90s, I believe, of today, okay? So we want to get in while they are on the upswing. They do have an agreement with Amazon, which is also notable, just to give them more legitimacy. Amazon basically has an option on buying shares at a price which is below the current price. And that's a big number, okay? Amazon can buy $4 billion in stock. That's really all that needs to be talked about, okay? We could go into details for hours on this company. You're not here for that. I'm not here for that. We have too many companies to choose from. I do think Applied Electronics is near the top of that list. And this chart looks amazing. Rory and Katie said, I like the stock. We can say, I like the chart. Okay? So, if you like this type of sort of quick analysis, which does go into the details, but also buy stocks that we think are going to go up without getting lost in the weeds, head over to stockscommunity.com. You can join for $25 for 7 days. Give it a shot. If you like these videos, imagine what it's like to get to chat with me, and then also with a community of people as the community grows. So I will see you in the next one. Hit that subscribe button if you haven't yet.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.